Well, folks, buckle up because there's been an absolute storm brewing in the silver market lately, and it's not just about the metal, it's about the entire crumbling foundation of our money system. Your no-nonsense guide through this chaos. And today, on this Saturday, February 15th, 2026, New York time, we're diving deep to cut through the hype, the fear, and the straight-up manipulation. By the end of this, you'll feel empowered, not panicked, with real insights to protect your wealth. OG Jhone AG here. Now, if you're actually learning something here, if you're verifying the data and it's sharpening your view, comment OG Jhone AG below. What sparked this frenzy? A viral clip exploded across platforms, starting with a massive silver giveaway that's ballooning month after month. We're talking prizes jumping from low double-digit ounces to triple that initial haul, all from personal stashes. Then it pivots to an epic interview with a battle-hardened former congressman who's been sounding the alarm on skyrocketing deficits, endless war spending, and the slow-motion debasement of our currency for decades. Stitch those together, free silver plus the system's collapsing, and it hits like a thunderbolt. People think this is it, the big silver breakout. But hold up, I'm here to dissect this without the drama. There are two threads tangled here, one about creator hype for views, the other about genuine survival strategies in a rigged economy. Mix them up and you get a toxic brew of FOMO, dread, and delusion. Let quotes. Start with the giveaway. The host ramps it up, first a modest stack, then double, now triple the ounces to one lucky winner. Entry, like, subscribe, comment your favorite silver form, coins, bars, rounds, or your price prediction. Smart YouTube play, absolutely. It boosts engagement like rocket fuel. But here's the shocking truth people overlook. This isn't a market signal, it's marketing genius. It screams attention grab, not silver's mooning tomorrow. Don't mistake viral tactics for economic prophecy. In 2026, with silver whipping from a jaw-dropping high of $121.64 per ounce in January, down to around $77.40 now, these giveaways fuel speculation, but they don't dictate fundamentals. Now, the meat, that interview. The congressman drops truth bombs, but viral snippets twist them into apocalypse porn. He nails it. Precious metals aren't for day trading gamblers chasing quick flips. He's stacking gold and silver as ultimate insurance against governments and central banks gone rogue. Shocking alert. In fiscal year 2025, the U.S. deficit ballooned to a staggering $1.80 trillion, yes, trillion with a T, while net interest payments alone hit nearly $1 trillion, up from just $345 billion 5 years ago. That's not tinfoil hat stuff, that's straight from Treasury books and CBO reports. Imagine this. Your interest bill now rivals massive programs like defense or Medicare. We're not just deficit spending, we're drowning in a vicious cycle where debt feeds more debt. It's like patching a sinking ship with wet cardboard. The hole widens, the water rises faster. Deep dive. Why does this terrify markets? Refinancing that mountain of debt at today's rates. Fed funds still hovering mid-3% creates a $38.4 trillion national debt time bomb. CBO projects interest could top $1.0 trillion in 2026, climbing to $2.1 trillion by 2036. That's $6.12 billion added daily, just last year. If rates spike or growth stalls, snapback could be violent. The congressman warns of hyperinflation ghosts like Weimar or Venezuela, where trust evaporates hourly. But is the U.S. doomed to that? Not automatically. Our deep capital markets, massive tax base, and dollars reserve status, still 58% of global reserves buy time. Yet, we're playing with fire. Emerging markets like China and India are ditching dollars, and central banks bought 863 tons of gold in 2025, down from 1,092 tons in 2024, but still massive, projected at 755 tons this year. That's institutions hedging hard against U.S. fiscal insanity. Shocking concern. Inflation's easing, but feels like a lie. January 2026 CPI, just 2.4% year over year, core at 2.5%, lowest since 2021. Monthly, up 0.2%. Victory? Hardly. Prices surged 20 to 30% cumulatively post-2020, even slowing rates lock in that pain. Groceries up 25% overall. Energy volatile. Gasoline down 7.5% last month, but natural gas up 9.8%. People blame corporations or tariffs, but the congressman fingers the real culprit: unchecked spending. Domestic programs, emergencies, foreign aid. It's a $7 trillion spending spree in 2025. Revenues only $5.23 trillion. Global bodies like IMF scream unsustainable. We need higher taxes, cuts, or miracle growth. Without it, math wins and currencies lose. Tariffs? The interview slams them as no silver bullet, pun intended. They might rake in revenue up big in 2025 amid legal fights, reshape chains, but if spending outpaces everything, they're band-aids on a gunshot. Recent analyses show tariffs distort more than fix, inflating costs by 0.5-1% per 10% hike. In a world eyeing de-dollarization, they're risky. China's hoarding gold, up 350 plus tons 2020 to 25. Poland too, 300 plus tons. Deep analysis. Tariffs could spike silver demand if they hit imports, but volatility kills. Silver's dual role, 60% industrial, solar, EVs, AI, means price swings hammer manufacturers. Silver's story, epic volatility spiked to $121 in Jan, crashed to $77 now. Why? Not just hype. Fundamentals scream deficit. Silver Institute 2026 marks the sixth straight year in structural shortfall, 67 million ounces short. Industrial demand? Massive 650 million ounces, down 2% but still record territory from solar, IEA, renewables boom, solar leading, EVs, solid-state batteries could double auto demand, AI data centers, 5G. Supply? Inelastic mining takes years, grades declining, no quick flood. Recycling helps, but deficits drained 820 million ounces since 2021. Shocking projection. At current rates, above-ground silver could vanish in 12 years. Gold has more stockpiles, silver's scarcer. Ratio at 65:1, but historically 15:1, potential 4x upside if it normalizes. Engaging twist. Silver's the emotional metal, reacts twice as hard as gold to rate cuts, Fed held but cuts loom. Crowded trades amplify, when everyone piles in, one noise triggers stampede. Manipulation? COMEX shenanigans exacerbate paper silver floods, but physical shortages halt sales. Australian dealers paused in Feb due to global crunch. Deep concern, miners won't expand at $77, need $65 plus stability. Volatility kills projects, widening deficits. Interesting analysis. Compared to gold, silver's industrial edge, PV solar alone, up 20% demand, could outperform in green transition, but position wrong, you get wrecked. Most losses, over-leveraged emotional buys, shaken out on dips, civil liberties angle, chilling. Stressed systems breed desperation. People trade freedom for fixes. Not dramatic coups, sneaky surveillance, temporary rules, digital currencies tracking every dollar. Incentives matter, politicians dodge pain, ballooning corrections. Solution? Not Washington saviors, education, awareness, moral money, views. Stack for insurance, not trades. Sponsor scrutiny, that ad for gold yields paid in gold without selling? Sounds slick, but yield from what? Counterparty risks, custody traps. Read fine print, or it's fool's gold. Debt-free money debate. Interest is a price signal, ban it, hide reality. Shortages, black markets follow. Markets need honest metrics. Manipulation distorts everything. Actionable plan. Decide, investor preserving power or trader chasing volume. Investors ignore hourly charts. Buy scheduled, small, boring, size positions, tiny, 5 to 10% portfolio max, realistic, silver screams, crashes, repeats. Share wins in comments to inspire. Fresh context. Dollars not collapsing solo, needs policy fails plus alternatives, but central banks hedging big, China, Turkey leading. Real takeaway, giveaways entertain, prices emote, deficits devastate. Educate, calm up, fortify your system. Enter giveaway vibe, sans gimmicks, like if helped, subscribe for daily truth, comment one finance win this month, cutting bills, stacking, whatever. Momentum spreads. One more, day date watching from. This is education, not advice. DYOR, consult pros. But wait. Deepen this. Silver's AI boom. Data centers gobble silver for conductivity. Stanford's solid-state research could spike demand 50%. EVs. Tesla's ramp needs millions more ounces. Geopolitics. China's export curbs tighten supply. Concern, if deficits hit 100 MOS plus, prices could triple, but volatility crushes weak hands. Shocking, Western antimony deficit, silver byproduct, at 90 MLBs/year, $1.8 billion market at $20/LB floor. Silver's tied in. Expand analysis, gold/silver ratio dipped below 50 briefly, sign silver's catching up, but macro sensitive. If Fed cuts aggressively, odd 75% by mid-2026, metals bid up. Inflation base effects ease, but tariffs could reignite to 3 to 4%. Fiscal track, CBO warns $2T plus deficits by 2028, interest 14% of outlays. Big number, debt to GDP 100%. Now, projected 122% by 2035. That's Greece territory without Euro safety net. Engaging hook. Imagine silver powering your EV battery, solar roof, AI phone, yet market treats it like casino chips. Deficit math. 1 B ounces annual demand, 900 M supply, 100 M gap widens yearly. Miners need $100 plus sustain to invest. Below stagnation. Interesting, silver space roll, NASA satellites, rockets, booms with Starship era. Market concern, February's physical squeeze, dealers halting sales signals real shortage, not paper games. X buzz from $120 to $70s, but fundamentals intact. Prediction. Consolidation here, then rip to $100 plus on next deficit report. Now let's dive into silver's wild ride. Strap in, because the real eye-openers are coming. We've covered the giveaway hype, the deficit doomsaying, and silver's industrial backbone. But now let's crank up the engagement with some jaw-dropping market research, straight from the trenches. I'll throw in reality checks that slap the speculation out of your system, backed by big numbers that'll make your head spin. Remember, drop that comment with your watch date and one finance move you're making this month. Let's build that community momentum. And if this hits home, subscribe and shout OG Jhone AG to lock in more of this unfiltered truth. Let quote S kick it with a reality check on silver's so-called impossible surge. Viral clips scream silver's doing the unthinkable, ripping to triple digits then cratering, but here's the shocking truth. In January 2026 alone, silver spiked to a record $121.64 per ounce, before pulling back to around $77.40. That's a 36% swing in days. But zoom out, from end 2024's $28.92, silver's exploded 167% in just over a year. Big number alert, that's outpacing gold's 73% gain in the same window, with gold now at $5,002.67. Why? Not magic, industrial hunger. Silver Institute's latest, 2026, marks the sixth straight structural deficit at 67 million ounces, down from 2025's 95 million, but still massive. Cumulative deficit since 2021, over 820 million ounces drained, equivalent to wiping out half the world's annual mine output. Reality check. This isn't hype, it's math. Supply can't catch demand, with mining stuck at 830 million ounces yearly, grades dropping 5 to 10% in key districts like Mexico and Peru. Deep analysis time. Let's dissect solar's silver addiction. International Energy Agency projects global solar capacity hitting 3,700 gigawatts by 2030, up from 1,200 gigawatts now. Each gigawatt slurps about 20 million ounces of silver for panels. Do the math. That's 48 billion ounces potential demand spike. But wait, thrifting's kicking in. New tech/silver loading per panel by 20% in 2025, from 20 grams to 16 grams. Engaging twist. If thrifting accelerates to 12 grams by 2027, it could cap demand growth at 5% yearly instead of 15%. But shock alert, even with that, solar alone gobbles 200 million ounces in 2026, up 10% yo-yo-y, pushing total industrial demand to 650 million ounces, a record. Concern over market. Manufacturers are panicking. Posts from industry insiders scream shortages. Australian dealers halted sales in February 2026 due to global crunch, premiums jumping 15% on physical bars. Reality check. Paper silver on COMEX trades thin, but physical? Dealers report 4-6-week waits, signaling real scarcity, not seen since 2021's squeeze. Now, EVs and AI, silver's stealth boom. Tesla's ramp up, they're projecting 2 million vehicles in 2026, each needing 20-30 grams of silver for batteries and wiring. Big number, that's 1.32 million ounces just from Tesla, but industry-wide? Global EV sales hit 18 million in 2025, up 35%, demanding 25 million ounces more silver. Interesting engaging analysis. Solid-state batteries like Stanford's prototypes could double silver use per vehicle to 50 grams for better conductivity. If 10% of EVs adopt by 2028, add another 10 million ounces annually. AI data centers? Google's building 15 new ones in 2026, each chugging silver for chips and cooling. Total sector demand up 50% to 15 million ounces. Shocking concern. China's export curbs on silver byproducts like antimony. 90 million pounds deficit yearly. $1.8 billion market at $20/LB. Tighten global supply chains. Reality check. Western miners can't fill the gap fast. Permits take 7-10 years. Costs ballooning 30% from inflation. Fiscal. Fiscal fiasco deep dive. U.S. deficit's a beast. FY 2025 clocked $1.80 trillion, down $41 billion from 2024, but still 6.3% of GDP. Net interest? Nearly $1 trillion, projected to $1.0 trillion in 2026, then $2.1 trillion by 2036. Daily add $6.12 billion. CBO warns debt to GDP at 100% now, 122% by 2035. Greece level without euro buffers. Shocking alert, interest now 14% of outlays, rivaling defense. Market concern, refinancing $38.4 trillion at mid-3% Fed rates could trigger yields spiking to 5%, adding $500 billion yearly interest. Reality check, not hyperinflation yet. Dollar's 58% reserve status buys time, but de-dollarization bites. China dumped $100 billion treasuries in 2025. BRICS alternatives grow. Inflation reality, January 2026, CPI, 2.4% yo-yo, lowest since 2021, down from 2.7%, monthly 0.2%, core 2.5%, energy eased, gasoline 7.5%, but natural gas plus 9.8%, food 3.1%, shelter 3%, engaging twist, base effects mask pain, cumulative post 2020 hikes 25 to 30%, groceries up 25%, locking in high levels. Concern, tariffs could reignite to 3 to 4% if broad analyses show 0.5-1% inflation per 10% hike. Reality check, easing doesn't erase squeezes. Wages lag 5 to 7% behind prices for median households. Gold-silver ratio dipped below 50 briefly in 2026. Signs silver's catching gold, historically 15-1, now 65-1. Potential 4x silver upside if normalizes. But volatility crowded trades. X-buzz. Predictions from $50 to $500, but latest crashes called at $70, failed as it hit $79.27. Interesting analysis, miners need $65 plus sustained, below, project stall, widening deficits to 100 MOS plus. Space angle, NASA's Starship needs silver for satellites, booming demand with 5,000 launches projected 2026 to 2030. Geopolitics shock, central banks bought 755 tons gold, 2026 projection down from 1,037 tons 2023. China plus 350 tons 2020 to 2025, Poland 300 plus, hedging against dollar, yes, gold now 19% reserves, euro 16%, reality check, not dollar death but diversification. If DXY weakens further down 5% 2025, metals bid up, plan refresh, stack insurance, not trades, buy dips calmly. If drops to $70, opportunity, position 5 to 10%. Share stories and comments, more research. Western antimony deficit ties silver byproduct shortages could cut 10 million ounces supply. PV solar up 20% demand. Prediction, consolidation $75.85, then $100 plus on next deficit report. Subscribe nudge. If these big numbers, shocks, and analyses fired you up, hit subscribe, comment OG Jhone AG, join the squad for daily deep dives. Hold. Let's unpack tariffs deeper. Trump's policies. Widespread hikes hit imports, inflating costs. Silver, dual-edged, protects U.S. miners but spikes industrial prices. Analysis. 10% tariff adds 0.5% to EV costs, potentially slowing adoption, but reshoring boosts domestic demand. Shocking. Tariffs raked big revenue 2025 amid fights, but distortions, supply chains shift, adding volatility. Concern. If China retaliates, silver exports curb tighter. Industrial versus money metal. 60% industrial makes silver rate sensitive. Fed holds mid 3%, cut 75% odds mid 2026. Metals rip. But if hikes? Slam. Engaging fact. Silver's in your phone. AI chips use 2-3 grams each. Data center boom. 50% demand spike. Reality check. Manipulation claims. COMEX paper floods, but deficits prove real tension. Fiscal path. CBO $2T plus. Deficits 2028. Unsustainable without cuts or taxes. Wrap extension. Educate, fortify. Silver's inevitable in debased world, but smart stacking wins.